Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar once again gathers momentum on Friday after data showed that the US job growth slowed more than expected in July in the US. But the labour market conditions continue to tighten despite the slowdown in job growth. The unemployment rate supported expectations for the central bank in the US to plan to raise interest rates at least once, even possibly twice this year. The Fed is expected to raise interest rates in September with the speculation of the fourth in December, and I totally agree with this. The Australian dollar did surge on Friday from an intraday low of 73.47 to a high of 74.10, and from there does question whether the market can sustain above 74 cents. If so, then we would look towards the region of 74.55.65, which I'm still calling as an opportunity to sell. Technical implications is not bullish, along with the 60-day moving average, which also is around 74.64. So right on the target of my resistance. It does suggest that good supply should emerge from that level if re-challenged, and expect to see a fall towards the region of 73.45.55 with the base or objective still exposed at 72.55.65. The challenge to the downside awaits for the euro at 114.85, and then after Friday's price action, the markets did see the dollar index challenge the 95 figure 20 undefeatable level and closed there. The non-farm payrolls had increased by 157,000 for the month of July, but missed the 191,000 forecast. The unemployment rate fell by 1/10 of 3.9%, after previously holding at 4%. This now is the lowest level in 50 years. The overall job picture, though, continues to look solid, according to the Labour Department numbers released on Friday. Also, the key wage average earnings met the expected forecast of 3%. As I mentioned, the Fed is widely expected to move rates in accordance of September and likely seeing a fourth one in December, which should eventually meet its 2% inflationary target. So as I mentioned, the euro with the dollar index looking positively strong here, but we could see a challenge of this 114.85 level. Beneath there does expose the next target, which is at 112.80.85. Resistance on the day seen at 116.15 to 116.75. The dollar yen story, very interesting to see, is challenging this level again at around 111, with the uptrend clearly seen around 110.75 to 95. From a technical implications, the stochastic is bullish. I'm not getting negative at this level after the recent rejection. The People's Bank of China adjusted the forward foreign currency risk reserve requirements ratio to 20% from current 0%, while announcing the tariffs on US goods, leading to the Chinese currency rebounding from an over 1 year low against the greenback. It has been reported that China said on Friday that it would slap tariffs of around 60 billion in the US goods, with charges ranging from 5% to 25%. Many of the goods are agricultural related and others on various metals and chemicals. Looking at the price action, though, if we do hold above 110.75, then we are looking back towards the region of 111.60.70 to 112.50. A combination of things for the pound now at this point is the fact that we're getting quite close to the objective of 128.40.60, with the pound tumbling on Friday, with a combination, as I mentioned, of the dovish Bank of England rate hike of 25 basis points. Also, Mark Carney gives concerns of a no Brexit deal may keep the bears occupied, and also could see a Great Britain cold comfort, as he put it. From my technical point, I believe the market's still got room to fall lower and challenge either 129.40 to 128.40.60, with any rally finding the cap around 131.05.15. The gold story still weak, but getting exhausted. We are extremely oversold and low, should I say, the rest of this region of the RSI could put a bit of positive back into the market. I'm viewing the base now at 1,180.85 and could see a rise up towards 114 to 1,220 as a potential target. And rounded off with oil, well, the market has failed to take the challenge higher after the recent positive candle we can see here. I still hold the region that the $66 a barrel will be challenged, and therefore look for any sell or rallies into 69.5 as a good opportunity to shorten the market. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report. I hope you enjoy the great start to the new week.